All right, get ready to dive into the world of Forex trading today. We're looking at Grace Cheng's book, 7 Winning Strategies for Forex, and we've even pulled some intriguing data from the COT report. Think of it as our treasure map to the currency market. Ready to decode some secrets.
Absolutely, and you've picked the perfect time for it. Having these strategies really is like having a roadmap to navigate the world's most traded market, and trust me, it's a wild ride.
From what I'm seeing in your notes, it seems like Cheng starts right at the very beginning. What Forex is, why it's so alluring, and honestly, why it's even more captivating than those ancient Egyptian hieroglyphs.
It's a language of its own. Cheng really hammers home just how enormous Forex is. It's constantly moving 245 with an unbelievable amount of money flying around. This constant activity is what makes it so liquid. You can always buy or sell. You're never going to be stuck holding the bag like you might with, say, a thinly traded stock.
That's a huge relief for anyone who's ever been desperate to get out of a position but just couldn't find a buyer. But let's talk about that why factor. Why are people so drawn to Forex trading?
Cheng jumps right into it, and it really boils down to a few things. Leverage is a big one. You can control some really large positions in Forex with a relatively small amount of capital, which of course has the potential to seriously multiply your profits.
Okay, that's definitely intriguing, but I've always heard that leverage is a double-edged sword. It can amplify losses too, right?
For sure. We can't overstate the importance of understanding how leverage works and using it responsibly, but aside from that, the Forex market offers unmatched accessibility. You can trade from anywhere in the world if you have an internet connection.
That's a complete game changer for people who are tired of being glued to their desks. It's like, trade from a beach in Bali, or, I don't know, the top of Mount Everest. Okay, maybe I got a little carried away, but you see what I mean. Let's switch gears and talk about strategies. What was the first big takeaway for you from Cheng's book?
One of the most fundamental things she talks about is understanding market sentiment, which is kind of like the driving force behind price movements. Think of it this way. The Forex market is like this giant tug of war between buyers, the bulls, who believe a currency is going up, and sellers, the bears, who believe it's going down.
So it's like this endless battle of optimism versus pessimism, but with actual money at stake.
Exactly. And getting a handle on who's winning that tug of war, the bulls or the bears, is crucial for making informed trading decisions. Cheng's argument is that if you can accurately gauge the prevailing sentiment, your chances of success go way up.
That makes a lot of sense. You wouldn't want to bet against a stampede of bulls, or for that matter, a herd of bears. But how on earth do we even start to measure something as elusive as sentiment?
That's where it gets really interesting. Cheng points to a bunch of factors that can influence sentiment. Things like economic data releases, unexpected geopolitical events, even just rumors and speculation. For example, if a country comes out with strong economic growth numbers or decides to hike interest rates, that tends to attract foreign investment, which then pushes their currency higher.
So it's like a chain reaction, right? Positive news leads to a surge in demand for that currency, and boom, the price goes up.
Exactly. And then, of course, negative news or any kind of political instability does the opposite. It can make a currency drop in value. It all comes back to supply and demand, but it's driven by the overall mood of the market.
This is fascinating. So how can we, as traders, use this information to make better decisions in the market? Give us the inside scoop.
Well, one practical way is to keep an eye on those economic calendars and news feeds so you know about events that could move the market. Another tool Cheng recommends is the COT report we talked about earlier. It gives us a glimpse into what the big players, those institutional traders like hedge funds and banks, are doing. These are the players who can really move the market.
Okay, so the COT report is like a secret window into the moves of the market whales. What kind of insights can we actually get from it?
The COT report breaks down the positioning of different groups of traders, including large speculators and commercial hedgers, and extreme positioning from these large speculators can be a really valuable signal.
Hold on a sec. What exactly do you mean by extreme positioning?
It's when the majority of these big players are all betting in the same direction. Let's say the COT report shows that a huge chunk of large speculators are net long on the euro. That might suggest that the euro is overbought and a correction could be coming.
So it's like a contrarian signal. If everyone's on the same side of the trade, something's got to give. I'm seeing how variable this could be.
It's not a perfect crystal ball, but it's a powerful tool for getting a feel for market sentiment and spotting potential turning points.
I have a feeling this is going to completely change how I approach Forex trading. Understanding what drives the market seems just as important as mastering the technical stuff. Wouldn't you agree?
Absolutely. Cheng actually illustrates this brilliantly in her book with a real-life example of why understanding these fundamentals is so critical, especially with a strategy like the carry trade.
I'm listening. Tell me more.
Imagine borrowing in a low-interest currency and then investing that money into a higher-yielding one. If the exchange rate stays stable, you're essentially pocketing the difference in interest rates.
This sounds like a recipe for easy money. But knowing the markets, I doubt it's always that simple, is it?
You're right, and Cheng uses this perfect example. She talks about the New Zealand dollar versus the Japanese yen back in 2005. New Zealand had super high interest rates, while Japan's were practically zero. This made the NZD-JPY pair a really hot pick for the carry trade, and for a while, traders were doing great.
This is where it gets dangerous, isn't it? What happened?
Well, there were hints of a possible interest rate hike in Japan, and that sent the yen skyrocketing, which then caused a sharp and pretty painful unwinding of all those NZD-JPY carry trades. It was a harsh reminder that even when a strategy seems like a surefire win, ignoring shifts in market sentiment can cost you dearly.
Wow, that's a cautionary tale if I've ever heard one. It's like thinking you've discovered a shortcut through the jungle, only to realize you've wandered straight into a tiger's den.
You got it. That's why it's crucial to not only understand how a strategy works mechanically, but also to think about the bigger market picture and, of course, the risks involved.
Risk management. The words every trader loves to hear but often forgets. It's like wearing a helmet when you're cycling. You might not always need it, but when you do, you're thankful you have it.
I couldn't agree more. And on that note of risk management, there's another thing Cheng stresses, which is figuring out your trading style. One that suits your personality, risk tolerance, and how much time you have.
Okay, I'm ready to hear more. Let's talk trading styles.
She starts by describing scalping, which is like the Formula One racing of the Forex world. You're trying to make profits from these tiny price changes, getting in and out of trades in seconds or minutes.
That sounds incredibly intense, like you'd practically have to be glued to your computer screen 24/7.
You're telling me. Scalping requires nerves of steel, lightning-fast reflexes, and a high tolerance for stress. Definitely not for the faint of heart. Then there's day trading, which is a bit more manageable.
That sounds more like my speed. Tell me more about day trading.
Day traders hold their positions for the day, aiming to take advantage of price movements within that day. It's a good fit if you can spare a few hours a day to watch the markets, but you still want a good night's sleep.
So it's all about finding a good balance between being active in the market and actually having a life.
Exactly. And if you prefer a more hands-off style, Cheng also talks about swing trading and position trading. These involve holding on to trades for days, weeks, sometimes even longer.
So if scalping is sprinting and day trading is like jogging, would you say swing and position trading are like leisurely walks in the park?
What a great way to put it. The beauty of it all is that there isn't a single right trading style. What matters is finding one that clicks with you and fits your life.
This has been incredible. We've covered so much. The basics of Forex, the mystery of market sentiment, even different trading styles, and we're just getting started.
We've only scratched the surface, but hey, you're on your way to becoming a much more informed and strategic Forex trader already.
And we're back, ready to ride the Forex wave. It feels like we've already had some big ha-ha moments about the market, but I know we're just scratching the surface.
It really is incredible how much there is to uncover, right?
Yeah.
Like peeling back the layers of an onion. Or maybe a more appropriate analogy would be like solving a complex puzzle. Each piece contributes to the bigger picture.
And speaking of puzzles, let's talk about putting those pieces together to build some actual trading strategies. We touch on different trading styles and, of course, the importance of understanding market sentiment. I love how Cheng compares it to the wind in a sailor's sails. It's that driving force.
She's spot on. And one strategy that really leverages that wind is trend trading.
Ah, yes. The classic buy low, sell high. But I'm guessing it's a bit more nuanced than just that, isn't it?
You got it. It's not quite as simple as hopping on every upward tick you see on a price chart. Cheng's point is that successful trend trading is all about finding those powerful phases of an established trend, those moments where momentum is really building, and then riding that wave until it starts to lose steam.
So it's about timing those entries and exits perfectly to squeeze out as much profit as possible while keeping your risk under control. But how do we actually identify those moments? How do we know when a trend has real legs and when it's about to peter out?
That's where our trusty technical indicators come in. Remember those moving averages we talked about? Well, they can be super helpful for gauging both the direction and strength of a trend.
Right, like having a compass to guide us. But we need more than just a compass. We need to be able to measure the speed and force behind that move.
Exactly. And that's where the ADX indicator, the average directional index, comes in handy. Cheng really likes using the ADX to confirm the strength of a trend before jumping in.
Okay, you've piqued my interest. Break down the ADX for me. What are we looking for here?
Think of the ADX as a speedometer for trends. It runs on a scale of 0 to 100. Typically, a reading above 25 tells us that a trend is strong, while anything below 20 suggests a weaker trend or maybe a ranging market.
So a higher ADX means a stronger trend and potentially more opportunities for profit if we time it right.
Precisely. And the beauty of the ADX is that it doesn't matter if the trend is up or down. It's simply telling you how strong that move is, regardless of direction.
Now that's helpful. I can already see how combining the ADX with other indicators like moving averages can give us a much clearer picture of what the market's up to.
For sure. But even with the best indicators, timing is still key. Cheng suggests waiting for those pullbacks or retracements within the larger trend. Those dips often present a better entry point.
So instead of chasing the price as it climbs higher, we're waiting for those brief pauses, those moments where it takes a breather before jumping on board.
Exactly. It's like, would you rather try to jump onto a moving train that's going full speed? Or would you prefer to wait for it to slow down at the station?
That's a fantastic analogy. I know I'd much rather have a smoother ride than risk a nasty fall. But let's say we've timed our entry perfectly. How do we know when it's time to get off the train?
That's the art of trend trading.
Yeah.
Knowing when to ride the wave and when to gracefully paddle back to shore.
Okay, I'm all ears. What should we be watching for?
Cheng likes using a blend of technical indicators and plain old price action analysis to spot those potential reversal signals. For example, let's say you're long on a trade. You might watch for a break below a key support level as a sign that the trend is weakening. If you're short, you'd look for a break above a resistance level.
It sounds like a lot of this boils down to experience and developing a feel for those subtle clues the market throws our way.
You're absolutely right. It's all about recognizing patterns and probabilities. And that's why, as Cheng wisely points out, practicing in a demo account is so crucial. It's your chance to test out these strategies, get a sense of how the market moves without putting any real money at risk.
It's like having a safe space to hone your skills before you step into the ring. But speaking of different arenas, let's switch gears a bit and explore a strategy that really thrives in a unique market environment. Those decreased volatility breakouts.
Ah, yes, the quiet before the storm, right? We talked earlier about how these periods of low volatility can often be a precursor to some big moves.
Exactly. And Cheng dives deep into this, explaining how traders can use these quieter times to their advantage, potentially profiting from those explosive breakouts.
Okay, I'm hooked. Walk me through it. How do we identify these setups? And more importantly, how can we tell which way the market's going to break? Any secret formulas I should know about?
I wish it were that simple. We might not have a crystal ball, but we do have tools that can help us anticipate these moves. Remember our friend the Bollinger Band. They're incredibly useful here. Right. The bands that widen and narrow depending on how volatile the market is. So are we looking for those bands to really squeeze in, kind of like a coiled spring, before they snap?
You got it. When those bands contract, it often signals that volatility is dropping and that a breakout is brewing. It's like the market is holding its breath before it makes a big move.
So the tighter that squeeze, the bigger the potential breakout. This is getting good, but how do we figure out which direction the market will break? It's like standing at a fork in the road, not knowing which path to take.
That's where understanding the context comes in. Cheng stresses that to anticipate the direction of the breakout, we need to examine the price action leading up to that lull in volatility.
So we're playing market detective, searching for clues to solve the mystery of where the price will go next. I'm in.
Precisely. Ask yourself this. Was the market trending upward before it settled into that calmer phase? If the answer is yes, there's a higher chance the breakout will be to the upside.
Welcome back, traders. We're in the home stretch of our Forex deep dive with insights from Grace Cheng's 7 winning strategies for Forex.
Ready to tackle those currency pairs like pros.
I love the energy. It's contagious. We've covered so much ground already, understanding market sentiment, mastering those trend-riding strategies, but I'm realizing Forex is a journey of constant learning, wouldn't you say?
Absolutely. The market keeps you on your toes. Just when you think you've cracked the code, it throws a curveball. Being able to adapt and fine-tune those strategies is so important.
Cheng emphasizes that in her book. It's refreshing. She doesn't just hand you a bunch of strategies and call it a day. She gets it. Trading isn't a one-size-fits-all thing.
Exactly. Think of it like a toolbox full of different tools for different jobs. You wouldn't use a hammer to tighten a screw, right?
Not unless I wanted a sore thumb.
Yeah.
So let's talk about some of those tools, those strategies Cheng recommends for navigating different market conditions. What are your go-tos?
She makes a great point about recognizing whether the market is trending or range-bound. In a trending market, like we talked about, the goal is to ride that momentum. But in a range-bound market, you've got to switch gears completely.
For those of us who are still learning the ropes, how can we tell if the market is trending or range-bound? What should we be looking for?
Imagine this. In a trending market, the price is like a hiker climbing a mountain, making higher highs and higher lows if it's an uptrend, or lower lows and lower highs if it's a downtrend.
Okay, I can picture that.
But in a range-bound market, the price is more like a sailboat stuck in a channel, bouncing back and forth between a resistance level, that's our ceiling, and a support level, the floor. It's less about a clear direction and more about sideways movement.
That's a great visual. So if we find ourselves in that range-bound channel, how do we adjust our strategy to make some profits from those swings?
Cheng suggests a strategy that seems pretty straightforward. Buy low and sell high within that defined range. Look for opportunities to buy when the price is near that support level, where it's bounced back up before, and look to sell when it gets close to that resistance where it's reversed in the past.
So we're riding those smaller waves within that larger channel, respecting those boundaries.
Precisely. But just like with any strategy, risk management is crucial. Cheng's a big advocate for stop-loss orders to minimize potential losses in case the market decides to break out of that range unexpectedly.
A good reminder that even when things seem calm, the market can always surprise us. It's better to be prepared. Now, Cheng doesn't just stop at the technical aspects. She dives into something I think is often overlooked but is so important for traders: the psychology of trading.
That's what separates the amateurs from the pros. You can have the best strategies in the world, but if you're not mentally prepared, you're setting yourself up for a tough time.
It's like having a high-powered race car but not having the skills or the mindset to handle it. You're bound to crash. So what are some of Cheng's tips for mastering that mental game?
She breaks it down into a few key areas: discipline, patience, and keeping those emotions in check. She stresses that these are just as important as any chart pattern or technical indicator.
Okay, I'm ready to hear more. Let's break it down. Let's start with discipline. What does that even look like when you're trading?
Discipline is all about sticking to that trading plan you've created, even when every emotion is telling you to do the opposite. It's about not going all in to chase a loss, not getting greedy when you're on a winning streak, and approaching every trade with a clear head.
It sounds like it takes a lot of self-awareness to quiet those emotional impulses that can lead us off track.
You're telling me. And that's where patience comes in. Cheng talks about being patient enough to wait for the right setups, even if that means sitting on the sidelines for a while. It's about understanding that trading is a marathon, not a sprint. And those impulsive trades often end up hurting your bottom line.
No more FOMO trades, right? It's about silencing that inner voice that says you need to be in on every trade.
Exactly. And then, of course, there's emotional control, which can be the hardest part for a lot of traders. Fear and greed, those are the big ones that can really trip people up.
I can see that. Fear can prevent us from taking calculated risks, while greed can make us throw caution to the wind. It's a balancing act.
Exactly. Cheng offers some great tips on managing those emotions. Having that well-defined trading plan, setting realistic expectations, even practicing mindfulness to stay grounded, all of that can help.
It's like she's giving us the tools to weather any storm the market throws our way. And speaking of navigating, we can't forget about choosing the right broker, our trusted guide in the world of Forex.
That's a decision that shouldn't be taken lightly. Cheng actually dedicates a whole chapter to this, walking through all the key factors to consider when you're picking a broker.
It's like choosing a hiking partner for a challenging trail. You want someone experienced, reliable, and trustworthy.
100%. She's got this great checklist covering everything from trading costs and spreads to the quality of their trade execution, their customer support, and of course, making sure they're properly regulated.
So it's not just about finding the cheapest option, but really about the overall value and peace of mind, knowing that your trades are being handled properly and fairly.
Exactly. And something else Cheng points out is the importance of choosing a broker that matches your trading style and your needs as a trader. A scalper, for example, is going to have different priorities than a swing trader.
It makes sense. You wouldn't want to be stuck with a clunky trading platform if you need to execute those lightning-fast trades.
Exactly. So do your homework, Shop around, compare, and find the broker that really fits you best.
This has been an awesome deep dive. We've really explored so much, mastering technical strategies, understanding how the market thinks, even the psychology of it all. What are your final words of wisdom for our listeners as they set out on their own Forex journeys?
Remember that knowledge is power. The more you learn about the Forex market, the more confident you'll be in your decision-making. But knowledge without action won't get you very far. It's like having a car but never actually driving it. So put what you've learned into practice. Start with a demo account if you need to.
I love that analogy. Don't be afraid to get behind the wheel and take it for a spin. And as you gain experience, remember that flexibility is key. A skilled surfer adapts to the rhythm of the waves, and a successful trader adapts to the ever-changing market.
Couldn't have said it better myself. And above all else, protect your capital. Think of it like wearing a seatbelt when you're driving. It's always better to be safe than sorry.
Words to live by. And on that note, we'll wrap up our Forex adventure. We hope you've enjoyed the ride as much as we have. Until next time, happy trading, everyone.